Hello traders, welcome to your daily market update for Monday the 20th of April 2015, and as you can see the data coming into this week on Monday is quite light. We do have a speech for the Canadian governor, and the market will be focused on that because it's going to be interesting to actually see what he says. Previous statements have been quite bullish for the pair, and you'll note that they've mentioned they're going to leave rates on hold. There's no plans for cutting any further. Their data was quite good last week. We've seen the retail sales come out 3 times better than the market even expected. So it's quite a good result, and I think that the momentum for the Canadian dollar could continue. I spoke about the technical levels that chart broke, and we'll have a look at that in a minute. The US dollar remains soft, but we did see some buying come back in at the late Friday session. I guess it wasn't so much buying, it was just profit taking of the shorts, thinking that the market could see buyers coming in this week after such a big pullback. People could see this as a good opportunity to be buying for the long term. We did have a better than expected Michigan index. It was the best since 2007, so that was quite good. But other than that, data has been soft, and the market's really focusing on whether it's July or whether it's September or when the Fed will actually raise their rates. The Euro's fears for Greece actually start to ramp up this week. Now, on the 24th, which is the next meeting, and that's when Greece will appeal for the next bailout payment approval. And it's my opinion they won't get that approval. And if not, well, then we could see the euro actually be sold off a little bit, as the reality of Greece getting closer and closer to an exit of the Eurozone, we could actually see just the fears of that start to get priced in. The euro's rallied, and it's not because anything in that area is improving or the conditions are getting better. It's just that the market was so heavily focused on the US dollar. And when the US dollar was traded last week, when the whole market is focused on its profit taking and the fears of a long-term top, well, that's what we focus on, that's what the market was focusing on, and that's what we trade. Now that the US data is quite light this week, I think we could see a consolidation of the US dollar and possibly a short-term bounce just for this week before we actually move into some more critical data the week after. So if we have a look what's coming up, really the week doesn't kick off until tomorrow's RBA speech from Glenn Stevens in the RBA minutes, and that's going to be very interesting. So we'll have to keep an eye on that and see how that affects the Australian dollar. It's my opinion that it could actually weigh down on the Australian dollar, but we'll wait and see what he says. And then we have some more data later in the week. So today, really, the market's going to flow on from the effects of Friday, and it's going to be a technically traded market. If I go to the dollar index, you'll see here that the major support level hasn't been broken, and the 50-day moving average, if I zoom out, offered support since July. And I think that's going to remain intact. And as you can see, we've had a little bit of a bounce here as the market come down and tested the 50-day moving average. And I think it's not going to bounce above the 100 anytime soon. It's going to be, that level is a major psychological level that I think is only going to be broken should we actually start to see some confirmation from the Fed exactly when they're going to raise rates. So for now, I'm expecting a little bit of a bounce, and that's just my opinion, and we'll wait and see what plays out. The markets are forever changing, but for now I'm looking for a bounce. If I go to the New Zealand, as you can see, we've got higher swing highs, higher swing lows, so we are in an uptrend, but it's a really consolidated rising channel, if anything, and it doesn't have a lot of momentum. And I think this move here is just purely on the US dollar weakness, and we've now reached a point of critical resistance. Just above 77 cents where it's trading now has offered resistance for a while. And that's October right through till January. It was just a level that the market couldn't break, and then it broke through it quite severely. So that could offer a little bit of resistance, and with the US dollar strength possibly popping back in for a short period of time, that could just move it to lower areas. But for now, it is a choppy market, and we'll have a look at opportunities elsewhere just for today. The Australian dollar. Now, we've got a candle formation here, which I call a key reversal day. I'll be teaching this to the traders signed up to trade with me throughout May. And essentially, we've got resistance level here, which, as you can see, historically has been quite strong. And I think that we could see consolidation or some moves to the downside as the market anticipates what we're going to get tomorrow from the RBA minister in his speech. So keep an eye on that, and then we could see some further falls. But I don't think the Australian dollar really deserves a rally just yet. The Euro's rallied just purely, as I said, on the weakness of the US dollar, but the data's been weak and there is Brexit fears. So if that starts to really become reality for the market, we could see it actually move lower, and that's what I'm looking for, and they're the trades that I'm looking to take part in. The Great British Pound had a big flame out where it went above it, the $1.50, which is a major psychological level, and then it pulled back in. So now we have a pretty good candle formation to also signal that it wants to go lower in the short term. I'm looking for, once again, US dollar strength to pop back into the market, and also trading off the technicals of a 1 hour chart. Now, we have here another key reversal day, as I would call it, on the US versus the Canadian dollar. And it's going to be interesting to see the market come down and test $1.21. This is a pretty major move, and it probably deserves a short-term pullback. And I think that ultimately, though, the Canadian dollar has some further moves to come, and you could get an opportunity to short it again up in here in some weeks to come, or trading sessions to come. We'll have to wait and see what gets delivered, but it's something that I'm looking forward to. But for now, $1.21 support. The US dollar versus the Japanese yen. This is just purely on the back of the bond market and the US dollar weakness, but we're still holding above some major support levels. And for now, you still have to keep this in a sideways consolidating market and trade it as such. There's no long-term trending trades here that you want to jump on, but you want to roll with the US dollar index. Well, that's it from me today. Hopefully this has given you some insight to how we're going to kickstart the week. Things will get more interesting later in the week, as they do every time we're in the third week of the month. So until tomorrow, trade well.